Hello and welcome back to the YouTube channel. In this video, we're going to be bringing you an Australian property market update, talking about some interest rates and what's going on in the financial markets. And today I have Nevada with me. He's from
Cube Home Loans. Thanks for having me, Luke.
Awesome, mate. And Nevada is actually my mortgage broker. So he's been able to get me some great deals the last few years, restructure Emily and my portfolio, and help us get into a position to grow from about 5 million to 8 million. So if you're looking for a fantastic broker to help you build out a property portfolio or just get yourself in a better position, head to purposeproperty.com.au and click on mortgage broker to have a chat with this guy. So what's been going on? The market's changing. What's the latest announcement from the RBA?
Yeah, so the big news is the RBA announcement, rates to be dropped by 0.25%. There's a lot of anticipation on that. People were sort of semi-expecting it. Some people are surprised. But good news for people with mortgages, and
we'll take a cut. Any cut's a good cut.
Yeah, exactly.
I think there's been a fair bit of speculation around the timing of the cuts. I probably thought that they would wait a bit longer.
Yeah.
Because if you look at the core inflation data, it's sitting around 3.2%.
Not quite target range.
It's not quite target range. And then if you look at the groundswell and market sentiment, the money market seems to be quite strong. Property market seems to be quite strong. Yes, cost of living's definitely gone up a lot, and building and all those areas have gone up. But the property bucket seems quite strong still. So I think, for them to make a cut now is a little bit early, but we'll wait and see if they do further cuts this year.
It's one of those things we get asked all the time from clients. What do you think rates are going to do? And the honest answer is I've given up.
Wait for the next meeting. Wait
for
the pressure to be put on the RBA to cut again so that people look good. And
one of the guys in our team says, in my professional opinion, a few years ago rates were much lower and now they're much higher. And that's the
good assessment. Yeah,
that's the extent.
Now you're getting assessed at 9%. You were assessed as 6%.
Yeah, that's right. So good news. The rate has reduced. The majors have announced they're all passing it on. I think that'll be the consensus for most lenders. Will be passing the discount on. There's different dates. So some have sort of said that'll happen on the 28th of Feb, some on the 4th of March, but definitely make sure and check your rate to make sure that does actually occur. What a lot of people don't know is that your repayments don't automatically reduce with some lenders as well. So
in terms of your fortnightly, weekly, monthly.
Correct. So with a lot of lenders, they'll actually leave that in the same as it was. So the benefit then, your rate's lower, your repayments are the same, so you're paying it off faster.
Principal off, yeah.
So that's an acceptable strategy if you want to leave it that way. But if your priority is cash flow, then you may actually
always is, mate.
Yeah, exactly.
If you're me, I say to all my clients, as much cash in our pocket rather than the banks to give yourself the choice. But yeah,
exactly. So if that's your priority, then you may have to actually reach out to the lender to actually get them to drop those repayments down to the minimum.
Okay, and 0.25% is not a big swing, but what kind of dollar figures are you seeing people float around in terms of benefits?
Yeah, we actually did some figures. One of my colleagues, Bart, put these together. So this is an example of, so we actually looked at a 0.3 reduction, so not quite a 0.25.
Mm-hmm. You guys are able to get a little bit more. You squeeze the bank. And
and this is on a scenario where we did a recent scenario where we did a rate review for somebody, which is not a refinance application, but we essentially negotiated
on their behalf.
Said this client's considering leaving.
That for me. I'm always like, go to the broker and get him to do the legwork. Yes, you might have to do discharge forms or things like that. But if you can get your broker, a good broker will be someone that is an advocate for you.
Exactly. And from the bank's perspective, they spend a lot of money trying to acquire customers. So they're now more actively trying to retain clients. And if they can discount the rate a little bit to keep you there, they're happy to do that. In a lot of cases, not all cases, but in this case, a 0.3 reduction. This is across a larger portfolio of 2.5 mil worth of lending.
Okay.
Cash flow per month was just under $500 a month, so it's quite considerable. And if they just, instead of, I guess, reducing the repayments, if they just put that extra towards paying it off the loans, they'd pay them off 2 years, 7 months faster, or save an interest of over $300K.
Wow.
So it's quite.
It adds up, that compound effect of $500 a month. Might be getting more than $500 a month.
And it's one of those things, like, people put it in the monthly perspective and the weekly perspective, and that's sort of the here and now, and that's important for sure. But when if you're putting off making those phone calls, I'll negotiate my rate later. When you actually put it in big overall dollars and cents, it can kind of emphasize
up.
the importance of that, having that conversation as soon as you can.
Yeah.
Let's minimize the bank's profits and put more of it in the investors' pockets for sure.
The only time and seasons that I've probably accepted not worrying about rate cuts is if you're restructuring.
Yeah.
Like from a buyer's agent side, working with your broker, yes, we want to get a sharp rate and it's so good to be on top of that. But if I'm going through an acquisition phase, like we bought 2 properties last year, I said to the Nevada, I'm like, I don't really care about the rate. Like I do, but the statistics show from an asset building point of view, if you can control a bigger asset base, and yes, you might have to pay an extra % of interest rate during that window of time, then care less about the rates and more about building. But if you're, again, being an active investor and you're wanting to hold that portfolio, like I'm in that hold phase. So for me, being on top of every cut and making sure that it's all being passed through is definitely of the utmost importance.
Yeah. And the rate is one piece of the bigger puzzle. And a major component of that, and also obviously where you come in, is the right property. Sometimes getting the right property requires speed. It requires higher capacity.
Leverage,
a lender that has a suitable policy, because you're not waiting for the financials. You don't have the time. So in those instances, short term, having that higher rate to get the right property, big picture wise, that makes complete sense.
And in a future video, Nevada and I will probably chat more about, there's something that I want to do, which I don't know if you can do in Australia or not. I'm actually looking at an asset swap. So I currently have a certain amount of debt. And if I sell one of my assets, can you do that in Australia? So we'll probably unpack something like that in a future video. Because that's something that I'm personally interested in. So I'm sure some other people would be keen to see if that's a possibility. But I think it's the broker, buyer's agent or strategist working with you together for the right deal at the right time, and then managing that. Because portfolio building is not fast. Last few years, it might look a lot faster because we've had a COVID boom. We've had costs of materials and land go up 30%. And so that compounding together has seen a lot more rapid growth. I think over the next 7 years, we're expecting back to more, I hope everyone's expecting more normal markets. Because we don't want to see for 20-year-olds that property's going 20% a year. It's too unsustainable for a market as a whole. So I think moving to this next phase for Australia, your big cities, your Melbourne, your Brisbane, your Sydneys, Adelaide's and Perths, they're going to move back to more those long-term averages, that's 6 to 10%, maybe a little bit more in some markets. But now it's up to you to make a good decision to give yourself that long-term steady growth if you're wanting to build a portfolio.
Yeah, and obviously when you're looking at investing, the time invested is a critical component to that. So making sure you're picking something that's going to be beneficial long-term, but also that make sure you can afford to hold it long-term as well. People that are forced to sell, that's generally when the investments don't look too good. So making sure you're comfortable to hold and you time
it when it suits you.
Exactly. And then sell when the time's right.
Okay. Well, with the current, I guess we've gone through what the RBA's done right this moment, but what can we as investors do currently? Like if I'm a client, I just want to reach out to you. What are you guys suggesting in this current market with the outlook this year that, most people could do as some key steps in their portfolio?
Yeah, I always suggest people I guess the first part of the conversation we have with clients is working out where they're at now. Like if people have multiple properties and, income's changed, we want to determine what's the value of the properties, what equity's there.
Snapshot, balance sheet view of everything.
Where's the servicing at? What's the household income and debt? What's that look like? What's the rental returns you're getting on those properties now? And then we can sort of determine what the options are. Ultimately, people decide whether they want to purchase another property or just sort of get the cost down and see if they can reduce rates here and there.
Refinancing is probably a big part. Lots of you doing a lot of refinances for people who are wanting to access maybe some equity or get a better rate or do both things. Is that quite a common?
Yeah, absolutely. And often it's multiple objectives at the same time. But a lot of refinancing for, to reduce costs, get a better rate, or access equity to fund further purchases or investments.
Yeah.
For sure.
I'm always coming to Nevada. Every 6 to 12 months, you should assess that. I know some buyer's agents are every 12 weeks. That feels a bit sharp to me.
Yeah.
But that's what making you guys do unnecessary work. But I think every 6 months, touch base with your broker. Like I'll be going to Nevada probably June and then December, pick your 6 months, whatever cycles suit, and go, here's what I'm thinking of doing. Is it looking possible in this current economic environment with the bigger picture of what I want to achieve as an individual investor?
Yeah, absolutely. And a good broker is happy to have those, big picture conversations, run the scenarios, run
Not
the
just one house,
hypotheticals. And not just do transactions. It's about that big picture, ongoing relationship. So if people reach out to me and go, "Hey, I just want to work out, what are the banks valuing my portfolio at, and what's my capacity if I decided to do something?" That's fine. At least you know what your options are,
working with,
and then you have more information to make your own decisions.
Amazing. Okay, so to kind of wrap up the current market update, what are you suggesting to people to do? What do you see the rest of this year in terms of the broking interest rate environment and kind of next steps for some people?
There's a lot of speculation around further cuts, when or if that actually happens.
Come on, 3 more, surely. Put a line in the sand.
Who knows what this rate cut has done? And I think the people it's having the biggest impact for is people trying to enter the market. As far as when the rates are a bit lower, everyone's capacity is that bit higher. So people trying to enter the market, it may only increase your capacity, $12,000 or $20,000 as far as lending amount. But if that's the difference between someone buying something for $650 or $670, sometimes that can be a major difference at that stage. But as far as the market moving forward, I would suggest it's a good time to review your rates and your loans you have in place, and then get an opinion on if there is cheaper options available.
Yeah, I mean, 12 to 20 grand, if you're a first home buyer or a first time investor, if you're buying at 650 and that's 670, that's a big deal.
Yeah.
Or 700 versus 720 in the, talking about, I'm a Brisbane buyer's agent. So, we don't buy all across Australia, but when we're signing up clients at the moment, the minimum I'm saying to anyone wanting to buy a house is 600K.
Yeah.
A few years back, you could buy a house for 350,
Yeah. 400.
So to get another 20 grand and everyone's going, it's too expensive. But what's it going to be like in 10 years' time?
Yeah.
I always take that time horizon of 7 to 10 years and go, if your broker can get you 12 to 20 grand from these rate cuts and you're making a long-term investment decision and it's going to get you that house rather than buying a townhouse or a unit, for example, which now are 500K as well.
Yeah, exactly.
Then I think it's about being opportunistic and also not over leveraging. And that's where the broker putting buffers in place. I mean, naturally the ASIC does that these days anyway, but I think it's important to run the numbers with the broker, make sure you're comfortable. I've always personally, as a chartered accountant and a buyer's agent, I've found that broker's always going to be overly conservative because of the buffers that you have to put in place.
Especially with the 3% buffer these days, like it's on the higher end of things. I mean, it's a good place to be conservative. Like you want to have that affordability and still be able to go and get a cup of coffee if you, whilst you have a mortgage.
Cut those $5 coffees. Yeah, I hear that all the time. You save yourself $2,000 a year, but kill your enjoyment in life.
Yeah. You could just negotiate your rate and then you get your coffees for free. So there you go.
That's right. Yeah. No, that's good. Well, if you guys are looking to get yourself a better rate, I personally think there's probably going to be more rate cuts, even though I don't think they should do it, if that makes sense. That's my opinion moving forward, but 2025 is going to fly by. We're already, almost the end of February. If you want to get on top of your mortgages, head over to purposeproperty.com.au and click on Mortgage Broker and have a chat with Nevada and the team at Cube, because time's going to fly. We're going to be in June. There might even be another rate cut. And then by the end of this year, there might be some groundswell, because 4 cuts, if that's 15K a cut or 20K a cut, that could be 60, 70, 80 grand by the end of this year in borrowing capacity.
Yeah.
And, you want to take advantage of it if you're in the position to do something.
The phones have always already started ringing a bit more on our end. And the reality is, to refinance a portfolio, it's tedious. There's like a lot of stuff we need to collect. Often we can achieve a discount without having to do that, just by negotiating on your behalf. So it's a couple bits of information we get from someone, negotiate with the lender on their behalf. It's not changing products or anything like that. It's just getting the rate drop. So it's a quick win. Yeah.
And even if you're self-employed, you work a unique job, you have bonuses, these guys consider all of it. Like in my position, I'm not a PAYG. So it makes it tougher for these guys with lenders and policies, but there's always options out there. And having a broker versus going to a bank, you've got so many more options. And it means you can find the right product that suits where you are right now. And that might be a different product in 2 years' time, which is what I found with these guys is a big difference, that I can go, this is where I am for this 12 months. And in a year's time, that might be a different broker, not a different broker, but a different policy, a different loan for that position in time.
Yeah. One of the big benefits for us is we have options.
Yeah. Using the full panel. Well, the market is changing. This is the start of 2025, and we're going to give you some more updates as we go through this year. So make sure you subscribe to the channel drop a like on this video and give this video a click somewhere in the middle here if you want to see more on real estate renovating and financial freedom. Thanks for sticking around.
Thanks, everyone.
We'll see you in the next one. Peace.